Okay, everybody, this is Jose here. We're gonna start in around 30 seconds. And before we start, as always, I'd love if you guys can have a quick hello message on the comments box. That would be the hint that tells me that you hear my voice, and therefore we're ready to start. Okay, so 15 seconds to type hellos and good mornings or good afternoons if you're in Europe, or good evenings if you are in Asia. Wonderful. Thank you so much, guys. Thank you. Perfect. Okay, so let's get the windows reorganized here on my desktop. Let me close the little animation here, and let's maximize the welcome slide so we can start our session in a way that is properly organized. Today is May 7, 2019. My name is Jose Blasco. I'll be your guide. Today we are getting together for short-term trading. So we'll be looking at the futures markets, probably look a little bit about the Forex as well. And we'll be planning on trades and executing those trades real time. Okay, so let's do a good teamwork as we often do. If you have any question, please make sure that you ask me so everybody follows what I'm doing. And if you appreciate the trades that I'm putting together, you can feel free to execute those trades in your own accounts. Paper money or real money, of course, you are the one to decide that, as well as the size. I will execute my trades most of the times with 2 contracts at a time, so I can have one safety target and one final target. So I'll use 2 contracts minimum. In your case, everybody, of course, will be different. Okay. But anyway, let's go ahead and go over the disclaimer before we start the session. So let's go for it. The following videos, clips, and demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive when using our products. Okay? Good, perfect. So we got our introduction out of the way. It's now time to trade. I'm going to bring the TradeStation platform in the main screen so we can start our get-together session for short term. I do have to warn you about something today, something partially a joke, partially seriously, which is the fact that I am quite jet lagged. I just arrived from a pretty long trip. And I don't know if you feel it, but I feel myself talking a little, let's call it a little funny, if you wish, okay? A little slower than normal, or, kind of a different pace, if you wish, okay? So if at any moment in time I say 77.91 instead of 77.19, I invert a number or something like that, well, you know where it's coming from, okay? So let's work together on this, if that's okay. And, I'll be monitoring the comments box. If there is anything that you want to say, or I was to, just call a figure in the wrong manner, please feel free to correct me on the comments box. Again, this is teamwork. I'm your guide. I'll be leading the session, but this is something that we do all together, okay? That's why we call it Get Together. Anyway, so let's get started. I see all of you ready here. Many names of you guys that have been joining us in a regular fashion all these weeks. This week is a little different, right? Because we didn't have our get together over the last weekend, which I have to say I missed you guys. Normally I got into this routine of doing the weekend session, the sharpening session, and it's actually quite nice. And this week we didn't, which in one hand is good. We had a little bit of rest, but in the other hand, it's a little different way to start the week, right? Because normally we come into the week, the trading week, out of a session over the weekend where we are refreshing and reviewing certain things. Where at this moment in time, we are just coming from, I believe the last session was on last Wednesday. Okay, so it's been 6 days that you guys have been trading on your own. Okay, so by the way, before I start planning the first trade of the day, I would like to ask you as well. How is it going, guys? Because I know out of emails that you guys are sending, some of you started applying the methodology with the moving average and the share bars, tick charts, etc., the UFOs, all those things. And I would like to ask you, how is it going? I would love if you could share with us on the comments box a little bit of how is it going on your side, okay? And you don't need to type something very, very positive. Let's say that everything is going very well, so please share. That will make me very, very happy. But at the same time, if there is a little bit of struggle in some place, I would like to know. I would like to know, because that way I can help you better, especially next weekend on May 11. We have a special session for questions and answers. We'll talk about calibration, and then I will be open to discuss anything related to the UFOs or not related to the UFOs. So we're going to be talking about different things. And if you guys if anyone in the group needs a little bit of assistance, extra help, whatever, it's going to be important for me to know so I can help you better. I also understand that if some of you in the group were to be struggling, sometimes it's not too easy or too much fun to kind of share that in the group, and you may want to keep it a little more private. So then what I would like to ask you, please, is to send an email with whatever struggle you may be going through, whatever you have identified in your trading that is not what you want. Let us know, so that way, in a way that is anonymous as well, I can also take care of it in the form of questions and answers and give you a little bit of extra support there, okay, and help you go to the next level if that's the case, okay? Because again, we are a mixed group. Some of you are very advanced, I know that, but I also know out of your emails and your communications with us that some of you are still in learning mode or learning stages, and some of you quite early in those early learning stages, okay? So so I want to help everybody, okay? So let me take a look at your answers here. Brian, I'm doing super well with options, having some struggles with short-term though, okay? So Brian, that would be great if you could detail that. I would say an email probably is the best, so that way I understand better where have you identified those struggles, okay? Ewin, I'm doing really well, very nice to hear. Andrew Watts, started yesterday with UFOs, so far you are up 1,400. Fantastic. Marcus, I'm reviewing classes and will put together the plan. In my words, intend to start trading next month. Until then, I'm too busy with other stuff. Very good. And very well said as well, in the sense of not starting to see what happens, but starting with a plan made of your own words. I love it, because that will build your confidence and that will allow you to trade more efficiently, okay? So good job. John Hammer, very happy. Developing all the time, obviously, very good. John Clifford, a little uncertain if to enter if price doesn't quite get to the EMA or not, but up overall, okay? So it's good that you're up, but the uncertainty, we have to remove that, okay? And as I plan the trades today, John, if there is any question, let me know, because I understand your point. Sometimes the average is kind of lining up with the UFO, but not exactly, so we certainly need to talk about that. Orlando Jose, it is working well, work in progress, great. Dirk, still experiencing but overall doing well, still have to catch up with the last sharpening session, okay? That's an important one there. Irwin, just close $300 profit on the NASDAQ, very good, very good. Bojan Petresti, generating profits while being wrong thanks to the conservative approach you discussed is very reassuring. After decimating my account, learning to get trades run now. Very good. So yeah, the first step, and if you read any trading book, I think all books agree on that, that they will tell you that the first thing you need to do as a trader is to learn to not to lose. That's the first thing. And these safety target that we use, etc., all those little things are gonna help you greatly to overcome that. And from there, it's all about growth, okay? Orlando, I have not traded options in my live account using the new methodology. This year, up in futures 20%. Very good. And the hide sometimes is better to less experience, fewer bad habits to unlearn. Well, you have a point. The hide, okay? Everything in life got pros and cons, and sometimes too much experience, sometimes develop habits, okay? And sometimes those needs to be changed. But anyway, guys, let's begin. 22 minutes from now, the market will open, and I would like to have trades ready. Well, actually, we don't need to wait for that. This is a 24-hour market. It's futures. To be precise, it's 23 hours a day. And I would like to find trades for now, okay? So let's begin with the S&P, okay? And again, we talked about, I'm just going to flash it quickly for the first trade, and then I may or may not use it, but and the reason why is because all of this is recorded in the sharpening sessions, okay? But you know that the first step that we follow to plan a trade using our EMA lab workspace, right? When we are using the methodology with the EMA, right? The first step that we do is to identify the trend, Okay, we identify the trend. We do that by using the 9 EMA. We also look at ADX or DMI, to be more precise, directional movement index, to identify if the trend is strong or weak. Okay, and this is the beauty of this is that it's just going to make you mechanical, because what you do, as we covered in the Sunday sessions, is that you ignore the last candle on the chart, you ignore that one, and then you look at the prior one, and you also look at the prior DMI, right? And the prior one got a close below the EMA, so that is a downtrend. And because the top of the DMI is green, okay, is red, it could be green, but it's not green, is red on that candle, right? So it tells you that you are in a downtrend and the downtrend is strong, okay? So that's good to know, because this will have an impact not only on the direction in which you want to trade, which side of the market you want to be, you want to be long, you want to be short, but also it has an impact on how you're going to find your targets. Are you going to look for nearer targets? Are you going to give yourself the chance to catch a longer move with a further away target, etc., etc. Okay, so what do we have here? We have a strong downtrend, and therefore, what do we want to do? We want to get short. Okay, we know that, but before we get short, okay, which would be our step 3, plan the entry, which is a short entry. We also have step 2, which is to define the target strategy, because sometimes you are about to get short, but the price of that market is already in a green UFO in a larger time frame, and therefore you are about to see a nice move against you, which actually is not too nice. And the reason is because it already went too low, right? It's a downtrend, but it went too low, so it's about to reverse the trend. And we will know that by looking at step 2, which is the trend identification. Now, when it comes to trend identification, I'm summarizing all my thoughts at the fastest speed I can, because all of this has been explained in the sharpening sessions. But in that process of looking at the target, I will not be looking at the 15-minute time frame in this case. I will be looking at the 60-minute time frame, not the 15. And the reason why is because, again, we are in a case with a strong downtrend. If the downtrend was weak, then I will look at the 15-minute time frame green UFOs. Okay, and these 2900 would be my target, but because the trend happens to be strong, I'm going to look at the 60-minute time frame, which may give me targets which are not closer or further away. Notice how in this case we have a closer target. Okay, and what is this telling you? Well, this is telling you danger. Danger, because even though we have a case where the indicators, which are nice because they make us mechanical, okay, but at the same time the indicators always have a little bit of a lagging effect. So the indicators are telling you that the trend is down and the trend is strong, but what the indicators, the moving average and the DMI, is not telling you is that the trend may be about to reverse, because you have a 60-minute green UFO right there. Is that making sense? So we have to respect that, okay, and that's why we go for the larger time frame. It gives us two benefits, which is when the trend is strong, we often ignore smaller time frame UFOs and shoot for further away targets, which are reachable because the trend is strong. But at the same time, when you find a green UFO in this case in a larger time frame compared to what the trend was said to be, well, that equals danger, okay? Danger for a complete reversal. And therefore, at this moment in time, in this plan that we are putting together, we're gonna be using 2902, okay, 2902.25. That's gonna be our target, okay? And please notice that this is the inner circle. Okay, in normal cases, you have seen me, I'm sure, and you have noticed that many times, that I normally use the upper part of the UFO as a target. But since we already reached that one, I'm gonna still respect that UFO, but instead of taking profits where price has already been, I'm gonna take profit just a little beyond. Just try to maximize my profit the most I can. And if I don't get there, it's okay. I mean, it's not ideal, but it's okay, because remember, we will also have a safety target to get out of the trade, at least with some partial profits. And if in the end the trend reverses and goes all the way against us, then you would not make money, you would not lose money, so it's okay. But if the trend keep pushing a little extra and you get to the 2902.25, you will then be maximizing your profit, which is our job as traders. Okay, I'm sure you have You have heard that a million times. It's a classical quote of Wall Street when we say that when we talk about the job of a trader is to cut the losses short and let the profit run. Okay, so letting the profit run certainly doesn't mean hope for the best, cross your fingers and hope for the best and hope it's gonna go as far as you want. It's not what it means. Let the profit run means give yourself the opportunity for a greater profit within a realistic environment. Okay, and the realistic environment here tells us that 2092.25 we may have a reversal at that point. So we'll take profits there. Okay, now for me to be able to get short, okay, I need to find red UFOs, okay, red UFOs either in the 2-minute time frame, either in the share time frame, either in the tick time frame, and those UFOs we need them to be lining up with the moving average, okay. And again, and on top of that, we also know that as this market goes back up, in order to reach the average, and from there potentially go back down, like it happened here. It went to the average, it went back down. It happened here, it went to the average, it went back down. It happened here, went to the average, it went back down. So we are trying to do the same thing, but we also need to be aware that as the price is coming up, when that leg is moving up at this moment in time, okay, the average will also have a little bit of an effect on moving up, just a little bit. So in other words, what I'm trying to say is that 29.1147 may become 29.12, 29.13, something like that. Okay, so be a little bit flexible when looking at the UFOs, okay, in order to look at UFOs that are more or less aligned with the average, okay, but you also need to count on the average to move up a little bit for when price gets to the UFO. So again, if we start with this number in your mind, 29.11/12, okay, 11.12, so 11 in here would be around here, and we got nothing around 11. 11 in this chart would be around here, and we got nothing around 11, but we do have something around 12. Okay, and remember, as this market goes up, the average will go up by a little bit. So a little bit may bring price from 11 to 12. Okay, so those UFOs that I just located on the 2-minute time frame. Oh, sorry for that. I'm just using the wrong drawing tool. So those UFOs that I just located in the 2-minute time frame may be valid. Okay, and then the ones UFO that we also have on the tick chart, 29.1275, also happen to be valid, because if you look at this price range, okay, from 12 to 14, and this is from 12 to 14. So basically we are talking about the same price range, okay, which depending on the type of chart that we use, tick charts or time-based chart, the look and feel of those UFOs is different, but somehow the algo is identifying that there is potential for unfilled orders at that price level, which happens to coincide with the moving average. Okay, so therefore we have an entry to be set on the S&P. Okay, and I'm seeing that some of you are typing on the comments box. I'm coming to take a look at your comments right now, but let me place the order first, because the market will be opening soon, and I want to make sure we have the order in the system, because at the market open, things normally tend to accelerate. Right before the market opens, everything tends to slow down. But the moment the market opens, and some days it's not like that, but most of the days you will have a little bit of a spike. So I want to make sure my order is in the system. Okay, so what am I going to do? Well, I'm going to look at the bottom part of this UFO, which is 11.75. Okay, as you can see here in the bottom part, it's 11.75. Okay, the bottom part of this UFO is, okay, and I'm looking at the bottom part because I don't want to miss the trade, is also 11.75. So certainly it is indeed looking like at 11.75 we got unfilled orders. Okay, so 11.75, it's going to be my entry. Okay, so I am attaching an order with a bracket order with 2 limits and 1 stop, because I plan to use 2 targets. Okay, and the first thing I'm going to do here is to click on the sell side, okay, to enter my order with 2 contracts. Okay, here we go. I got my S for sell, safety target, and final target. Okay, now I need to adjust all of this. Okay, well, actually the final target, we know it's 29.0225 right there. Okay, so that's going to be your final target, 29.0225. 25. That's the one we spotted earlier using the 60-minute time frame, isn't it? Now the stop is the key, okay? And notice how the stop on the 2-minute time frame is very well located, right above the 2 UFOs, perfect location for the stop. But notice how on the tick chart that stop happens to be, within that UFO. We don't want that to be the case, because that could produce a situation where you get stopped out and then you see the market go your way all the way and you miss the trade after being stopped out, which is quite frustrating. Okay, so I'm going to move my stop to 29.15. 29.15. Okay, because this, I believe, will put it right above this green UFO, exactly, this red UFO. So notice now how my stop is in the white space in all time frames. Okay, so white space on the right, white space in the middle, and also white space on the left. Okay, so in other words, my stop is in the middle of nowhere, which is what I want. I don't want my stop to be in a key location, because this would be the recipe to be stopped out and then see the market move your way. Okay, so the last thing I need to adjust, okay, is my safety target. So if my stop is 15, let me bring a calculator so we make no mistakes. And I'm doing this first trade, I'm taking a little bit of my time on how to plan this trade. To some of you, maybe I'm going a little fast. It really depends on how long have you been trading, or how long have you been watching the sessions, okay? But really, I'm taking it easy. I'm gonna be a little faster for the most advanced guys in the group. I'm gonna be a little faster in the following trades. And we're talking about 3.25 points of risk. So if I was to calculate what is the value below 29.1175, which is my entry, by 3.25, that's 29.08.5. So 29.08.5, that's where my safety target should be. Here we go, which is a 1-to-1, okay? Exactly. So I have the trade perfectly set up now. So I got my entry with the UFO that coincides in the tick chart, also coincides nicely with the 2-minute time frame. My stop is above, white space above. My stop is above, white space above. Okay, so in here it's all white space in the chart in the middle, so it doesn't even matter. And then I got my mathematically calculated safety target, which is 08.5, okay, which is same distance from entry to stop, same distance from entry to target 1, safety target. And finally, my final target, which is 2902.25, that was identified in the 60 minute time frame. Okay, and I'm doing this with 2 contracts. Again, some of you may do this with 5, may do this with 4, maybe do this with 3, may do this with 25. Again, some of you may do it with 1. So if you do it with 1, it's not ideal. And probably what you're doing is that you are not using the safety target, you are shooting for the final target, and in the meantime what you'll do is bring the stop down and do a little bit of the trade management like we covered on the Sunday sessions. Okay, anyway, let's look at the clock. It's 9:23 a.m. Eastern time. By the way, I am streaming via YouTube, which means that probably there is anywhere between 10 to maybe 20 seconds delay between you guys and myself, depending on where we are in the world, because what YouTube does is detect my stream and they start kind of replicating my stream among different YouTube servers located across the world, and this takes a few seconds for the broadcast, and so this is getting to you with 10 to 20 seconds delay. So you will see your time on your computer slightly different than mine, okay, because of that. But in any case, okay, the prior close is below the average. Okay, we are in a downtrend. The next time a close will happen, it's going to be as the market opens. So no matter what, from now until the market open time, this trade is valid. The moment the market opens and we have a close, let's say the close was to be above the average, well then we have a change of trend, and then in that case, we may have a different situation, and we may need to either cancel the trade or replan a new trade or something. Or the other thing that may happen as well is that the market goes down a little more. Okay, so let's say this candle will look something like that. okay, goes down a little more. So if the candle closes down here, well, then the average is gonna go down here. And now instead of 29.11, it may be, 29.10. Okay, and if it was to be 29.10, well, then the trade would not work anymore because now you are shooting for an entry at 11.75, so that would not make sense anymore. So then you would need to look for UFOs that are 29.10, okay, or whatever that is. So this is a methodology which everything is going to be dynamic, and your trades, your plans are valid for 15 minutes because you are using the 15-minute time frame to identify step one of the methodology. Okay, so every 15 minutes you have to review. Because you may have to replan the trade. Okay, good, and you can certainly do that with other time frames. Okay, in this case, we are doing this with a collection of time frames from the right side. So we are using the 2-minute time frame. Okay, and this is because we are combining it with the 15-minute. Correct, but if you wanted to combine it with the 8, well, then you would use the 60-minute time frame. And if you wanted to combine it with the 21, you would use the 240-minute time frame. Okay, and we have talked about this before, but I just wanna make sure everybody's clear. If you were to use 60, you would do 60 and 8 instead of 15 and 2. Okay, and then you would have a different set of tick and shares time frames. Okay, and this varies depending on the market that you trade. Okay, I am focusing on the S&P and the NASDAQ, and I am focusing on the 2-minute time frame and the 15, and therefore everything I'm doing today has to do with the left portion on my screen. Okay, but for some of you out there, you may be different type of traders, and you may be interested in doing the same thing I'm doing with the 15 and the 2, using the 240 and the 21, and then you would use the 17,711 share bars together with the 10,946 tick chart. Okay. Anyway, so I just wanted to rephrase many things that should be known if you have been watching the sharpening sessions, but just to be crystal clear, again, because the market will open soon, and hopefully we'll get our trades triggered and we'll plan a few trades. Okay. So let me take a look at your questions before the market opens. Let me see. Moshi, I am having problem with Forex responding to the UFO. Do I have the wrong settings? Would you mind to be a little more concrete when you say problems with Forex responding to the UFO? I don't know what you mean by that, by responding. I don't know if it's the calibration settings. I'm not sure I get your question. So if you could rephrase it, I would really appreciate that. Sakunda, how are you? Marcus Jose, why do you have gray candles for the trend to see where it closes? Well, because I get your point. It may be a little more visual to look at color candles so you see where the close is. But I kind of like to pay less attention to the candles and more attention to the UFOs, and therefore, I got into this habit a long time ago to have my candles to be gray. It's just personal preference, and really doesn't have any other impact. Okay, yeah. Well, thank you for that, Orlando. Bojan Jose, a red UFO was just hit on the 1597, and a red UFO was generated on the 377. You took the short with the T1 before the UFO. Yes, I totally understand what you're doing, Bojan, and what you're doing is actually very, very fine. Very, very fine, especially because you are talking about a trend environment which is strong, as the DMI is pointing at. Okay, so what you're doing is basically you are taking trades below the average using the UFOs that are formed above, waiting for a confirmation using the UFOs that are formed below in the reactive timeframes. So this is kind of like a variation of the methodology I have been teaching during the sharpening sessions. What you're doing is quite advanced and quite intense when it comes to activity and speed of execution. But if this matches well your personality, let me tell you that what you're doing makes a lot of sense. So good job. And I'm not surprised that you are saying that you just hit target one. So good job. Wayne, how are you, my friend? Daily lower, it's 29.02. Very good, very good, very good. Because when a market stretches so much and gets to hit what a projection of the ATR measurement would be to the downside. Well, could it keep falling? Yes, anything could happen. But the reality is that you now have much less probability for the market to keep stretching because it already stretched what it normally does, right? So again, a good reason. I didn't look into that, Wayne, but good reason for us to have that target at 29 or 225. Very good. Target 2 is 29.03. Yeah, good one. So you hit your target already. Fantastic. Love it. Good job. Very good job. And again, what you did makes a lot of sense. Okay. And now it's quite intense. Okay. So maybe not for everybody. Okay. But definitely good job. Let me see, Marcus, how much wiggle room do we give for the stop? Okay. So that depends on the liquidity of the market that you trade. With the S&P, as you can see, I'm just giving it one tick because it's either it's going to work or it's not going to work. And there is no need to give yourself so much hoping room. Okay, the wiggle room, you don't want it to be hoping room. Okay, and therefore one tick, it's more than enough if it's a liquid market. Okay, the market just opened. Okay, so the market just opened. So now we are about to see a little bit more speed of movement. Hopefully, the speed of movement will bring the price up to our entry. I am looking at the current price. Okay, which is 29.1072. So it's kind of still 29.11, and therefore, as the market moves up and stretches a little to the upside and reaches our UFOs, I would be pretty positive that our average would be somewhere around that area. Okay, so I would say the trade is still valid. Okay, the trade is certainly still valid. So I am not gonna cancel or rectify my order on the S&P. Okay, so let me keep going through your questions, okay, and let's see if the market is nice enough to move up a couple of points. We only need a couple of points and we'll get filled. What else do we see here? Yes, Marcus, you are correct. The moving average should be between the entry and the stop. Okay, very good. So we are 1.75, 1 point and a half away from the entry. Let's see if we get there. Altong, do you have a preference for the minute time frame, the share, or the tick, or do you use the one that lines up with the UMA the best? That's the answer. Okay, no preference, my friends. A UFO is a UFO, and certainly you kind of have a more equalized weight per candle on the shares and the tick time frames. But still, if the algo identifies on-field orders in the time-based chart, it still has validity, right? And again, in a perfect world, you would have UFOs lining up on the 2-minute, on the share bar, and the tick chart, and that would be amazing, right? But at the same time, if you were to look for, if every time you trade, you were to look for the sky and the moon, and kind of like everything lining up, in the end, you would trade very, very few times, okay? And you would miss many, many trades, okay? Guys, look, this is, I want to make a comment to what's happening here right now, because this sometimes can be a little frustrating. And I want to make sure all of you have your mindset in the right place and you don't fall into any market traps such as chasing and stuff like that. Because if you think what just happened, notice how the market just hit the average and had a reaction where the reaction created a UFO, right? So next thing you know, you may be now rectifying, okay, your order and rush to get a trade on that UFO. And you know what? If you were to do that, it's not totally wrong. It's not totally wrong because that UFO does seem to be lining up with the moving average, but not exactly. Many times it's kind of a visual effect, and I want to make sure that you guys don't fall into any psychology trap, because notice how the top part of the UFO is 1050, where the average is currently 1080. In other words, the average is actually slightly above the UFO. Just a little bit, but it is above, right? So in other words, you may have the temptation that, oh my God, it's falling, I'm gonna miss it, and all those normal, natural human instincts may hit you, okay? And it's very important to be professional, to keep all of this under control. And you had a plan and you just need the market to come to you. And if the market comes to you, you'll execute. Actually, you don't even execute. You already placed the order. So TradeStation will execute for you. And if it doesn't come to you, then it's okay. 15 minutes later, you'll be planning on a new trade. But you want to make sure that you don't get impacted by that, okay? Unless you do something like what Bojan was saying, which as you now see the reaction happening, okay, now you have a red UFO in the reactive time frame. So now you go ahead and you trade a tiny micro UFO, okay? And that would be a variation of the methodology, okay? So I'm just phrasing it because it's happening, just to give you more diversity of options and things you can do. But careful, because you don't want to use the reactive time frame too intensively, because remember, it's called reactive time frame for a reason. It's not your edge time frame. The edge time frame gives you an edge where the reacting time frame doesn't, okay? And you can see how that UFO in the end didn't work. It could have worked. You had some, let's call it confirmation of it, okay? But we have a much better trade waiting to get filled. We are 3 ticks away from being filled. Let's see if this happens, okay? And guys, you know, if you never traded this methodology, it will be a great experience for you guys to execute this in a paper money account or real if you have more experience and you feel comfortable. Let me see. We just got filled, okay? So we got filled, okay? We just got filled. So we are being filled at the same price where the average is. We had the UFO, okay? And we are in the trade, okay? So now we would like to see the market to fall to reach our safety target and remove the risk of the trade. But also what I want to bring very quickly here, I also want to bring this very quickly here so we can talk about it, is the notes, okay, that I had for trade management, okay? So what are we gonna do? Well, we're gonna be looking at the amount of time in the trade, okay? And now we're gonna give this trade 3 to 5 candles of time-based edge time frame, okay? And if you have not reached your target, okay, because we are not talking about 3 to 5 candles on the tick chart or the volume chart. We are talking about 3 to 5 candles of the time-based chart, okay? So basically we're giving ourselves 6 minutes, okay? A little less than 6 minutes. We need to see 3 candles there, okay? And we had the first candle on the left is when we got filled. Second candle is now running. So now we want to see the third candle, okay, to really start moving to the downside, okay, towards the safety target. If after 3 candles we haven't got to our safety target, but we are in profit, then we'll close the trade, okay? If we are in a losing position, then we'll wait for the trade to be break even. Ideally, you could certainly be stopped out. We'll wait for the trade to break even, and then we'll close the trade manually for a break even trade, okay? That would be a time-based stop. That's a time stop, okay? And this is a little bit in the conservative side, but not that conservative if you go for 5 candles. It's more conservative if you go for 3, okay? In my experience as well, just to share a little bit of extra stuff here, what is also important is that you are aware of the time of the day at which you trade, because, and I believe I said that when we did sharpening, it's not the same to have a time stop at 4 a.m. When only the Asian big players are trading, compared to having a time stop during US time, where during US time, the US time big players are trading, the European are trading, and the Asians too. So the price movement, the speed of movement normally is faster, right? So we have 1, 2, 3 candles, okay? We have 1, 2, 3 candles. I'm gonna be looking at my clock now. So it's 9:38 a.m. in New York. When we get to 9:40, okay, when we get to 9:40, it's gonna be my third candle on the trade. And if I haven't got to my safety target, I will be closing this trade manually just by hitting the orange button close. Of course, that would produce a small profit, but at the same time, if the trade is not working well and is not happening quickly, well, normally it represents that we may be in a situation where the trend may be at risk of be reversing. So if I could, instead of take a $325 loss, I could take a small profit or a break-even trade, then I'll be willing to do that, okay? If you are that type of trader where you open the door to use time stops. It obviously has a disadvantage that we talked about it, which is the fact that, you could end up, getting yourself out of the trade for a small profit or a break-even trade, and then next thing you know, the trade goes all the way to the target and you missed it, okay? But at the same time, it's a little bit of a threat to the trend when you see that, nothing's happening on time, okay? And right now, as we speak, it's not looking good, okay? It's not looking good means we got 20 seconds before it's time for me to apply the time stop rule, okay? And I haven't reached my target one. So what I'm gonna do, okay, is move my safety target. Okay, I'm just gonna move my safety target to right here. Okay, to 1 tick. That's gonna be my break-even exit. Okay, so instead of closing it manually, so that's it. I just got out. Okay, interesting. Okay, I'm just gonna close the trade. Yeah, I should have moved both targets. So just applying my rule, okay, I'm just closing the trade here. Okay, so this trade ended up with a small profit of whatever. I believe I saw it was like $75, something like that. I moved my safety target to get filled the moment it was break even or better. And I didn't move my second target, which I should have. So I had to close the second trade with a market order with the close button, okay, which is fine. But basically, I made a small profit here, nothing to be too proud about. But now I'm going to be very curious to see in 5 minutes what's going to happen to the close of that candle. Okay? Because if the close of this candle is now above, I will congratulate myself by applying such an action, because that may mean that the trend is reversing. And by the way, that makes a lot of sense actually, because you saw what we saw earlier in the 60-minute time frame where we had a green UFO at the time. Okay, so it's either we're gonna find a new piece of evidence of having this market close below the average again with the DMI red, right, and replan a trade with a new red UFO, okay, or we will wait for this market to redefine itself in an uptrend and plan a trade again. Since I got 4 minutes to do that, and how is it going so far, guys? Because I did skip a few questions. So before I go for the next trade, let me see if I'm not missing anything. Yeah, Brand, Jose, are you not concerned about the opposing UFO on the 10-minute? Looks like a bear trap. Well, I'm not concerned, Brent, because it's a strong downtrend, right? And I already take care of that by having a safety target located. I have a safety target located at 1-to-1, etc., etc. So I'm not concerned. Could that UFO that you mentioned reverse the trend? Yes, absolutely. Okay, and maybe that 10-minute UFO is a consequence of the 60-minute UFO as well, which is the one that we use for the target. Okay. Now, by the way, notice what's happening here. Okay, and again, when this happens, don't be frustrated. Again, I'm talking about trading psychology. You may be feeling, okay, I got out at this point where the blue dot is, okay, and now the market keeps going. Guess what? You would be about or getting closer to get to your target, to your safety target, right? And you may be thinking, oh my God, I missed it. No, you didn't miss it. Because now, if this is true, what's going to happen is that in 3 minutes from now, we'll have a close below the average. The DMI will be red. You'll be ready to replan on a trade. And the average is going to be 29.10, something like that. And what do you have around 29.10? You have 2 new red UFOs, and you'll be able to plan a trade and get a re-entry, right? And you will get a re-entry. And if you're right, you're going to get your beautiful profit plus the $75 we just made before, which is nothing to be proud of, but still we took some money out of the market. Okay, so again, we should shoot for better reward to risk ratio relationships, but if it's not possible, it's not possible, right? And we don't have the power to control the market, so we need to keep adapting ourselves to whatever happens while we maintain under control our trading psychology. Okay, that's key. So no emotions. Okay, or if you wish, it's okay, emotions, but only the positive ones. Okay. Andrew, what exactly is the calibration value? So if you don't mind, let me answer that question on Saturday, May 11, because we'll talk about that, okay? Marcus, for trade management, do we always use the time chart even though the UFO may have only been on the other chart, right? Yes, because it's a time stop, so it has to be based on time. Is that making sense? It's purely time stop. Okay, so it has to be based on time. Let me see, Team Trader, do you move a stop if new UFOs start forming, but price hasn't moved two times? Yes. Yes, the answer is yes. Okay, and that would be rule number 3, which, by the way, I have more pending questions, but I need to start planning on my next trade, guys, because in like 30 seconds, we'll have a close. It's looking like the close is going to be below the average, guys. Okay, it's looking like the close is going to be below the average. So I want to position myself to re-enter this trade. Let's take a look. Let's take a look if that's going to be possible or not. We got 29.10. That is likely going to be just a little lesser. So let's call it 29.10 without the 57. Okay, this UFO has the limit to be 29.10. So to be honest, guys, I'm not very comfortable. I am not very comfortable with taking this trade, because when price gets to that UFO, at least on the S&P, let's check the NASDAQ, because the NASDAQ may give us the opportunity, but when the market gets to that UFO, the average is gonna go up maybe 29.11, and 29.11 is above 10. Okay, so you will not have that confluence. Okay, and yes, you may say, okay, but you are in the middle between that UFO and that UFO on the right. Okay, and if you were to say that, you know, I would take it. And again, I would not say it's crazy to take the trade, but you know, as a rule, you want to see your entry UFO to have some overlapping. And in this case, the entry UFO is finalizing at 10, where the average is 10.5 already. So there is no overlapping. Okay, so I don't feel this trade based on the rules. When I say I don't feel, it's not like I have a, how do I put it? It's not like I have a magic sense or I do magic. Okay, when I say I don't feel, I mean based on the rules, that's not what I got, and therefore I'm not gonna force the trade. Okay, so now with the NASDAQ we have a little bit of a different setup here. Let me take a look. The close is 35.25. The average. Wait a minute. I was clicking on the DMI, so I was not seeing the average. Okay, so the average is 35.4, the close is 35.25. So we are still technically in a downtrend. Okay, still technically on a downtrend. Still the downtrend is strong. Still we got the red on top. So we are still in a strong downtrend, but we have no red UFOs. Well, actually one UFO just formed, but notice how it begins at 37, where the average is 35. So you would be shorting above the average without the overlap. So really, we gotta wait. Okay, we have to wait. And wait doesn't mean we have to wait too much. Look at that. We don't have to wait too much. This UFO on the right begins at 33. On the top is 36. So that's a good overlap. Okay, that's good. So so that allows us to plan on the trade. Okay, so we're gonna enter a strong downtrend. Let me do this quickly. Hopefully I can be fast enough. I'm gonna be looking at the 60-minute time frame of the NASDAQ. Okay, come on, TradeStation. Please allow me to do this quickly. Okay. Okay, I just want to maximize this chart. Okay. Okay, this is really not the time to do this. Let me check. Okay. Give me a second here, guys. Okay. Cool. So, 60-minute time frame for the NASDAQ. So let me maximize my window. Okay, so guys, you've seen me do this before. I'm just gonna close TradeStation. Something's going on. Sometimes it happens. I'm not getting the response I need, so I'm just killing the processes of TradeStation on my other computer screen. So TradeStation will disappear. Here we go. I'm gonna be relaunching TradeStation. So you will see me type username and password in just a second. And the moment I do that, I'll be ready to replan on this trade, okay? Some of you may be actually doing it already. Let me see if I can multitask a little bit here and continue reading your questions. So, okay. Sohan, you closed it for 115, very good. Bojan, you made 75. Okay, so you got target one and you're still writing it. Good. You moved stop to entry, so you're doing the trade management rules that we did the other day. Yeah, Marcus, when it comes to reward to risk ratio, there is not a minimum. I would recommend you to watch the sharpening session, the last one, number 4, intraday number 4, okay? Let me see, Bojan, move stop to 2110, out for a total profit of 150 in this trade. Thanks, Jose. My pleasure, Bojan. I'm very happy to see you guys applying the rules. I'm very unhappy though, I got a computer slowdown. But anyway, so what do we have? Yeah, so we know we have the average at 31 at the moment. If the NASDAQ comes back up and hits the average is going to go back up and it's going to be around 33. We saw that before. Okay, so I would like to rely on that 33 level. To do this trade, I first need to look at the 60-minute time frame to identify my target. Okay, so I would like to maximize it's quite funny, it's not allowing me to maximize the chart. Okay, now good. So 60-minute time frame for the NASDAQ. Okay, so 60. Okay, and then we're going to activate the UFOs to find out where is the nearest green. Okay, and it seems on the NASDAQ there is a lot of room for this downtrend to progress a bunch of points extra. Okay, this may be one of those days where the market stretches because it has room to stretch. Okay, statistical calculations are very useful, but you know, if the next UFO is far away, there is room to go, right? So 7626.5. It's how far we may go. Okay, of course, we are going to be acting on this trade based on the rules that we commented on the Sunday session. So I'm just going to get that chart to be back to 15. Okay, and again, close below the average. The trend is strong. You know, all the parameters are the same. So yeah, so shooting for that 33 level. Okay, so okay, yeah, so 77.33 is the bottom part of this UFO, and this is where I'm gonna have my trade entered. Now, because the NASDAQ moves many more points per day than the S&P, to enter this trade, I'm just gonna use the order bar, and I'm gonna use it, I'm gonna use 2 as a quantity, and I'm gonna place the order using a short with 2 limits and 1 stop. Okay, so my entry, okay, it's going to be 77.33. Okay, the stop, we got 36. So initially I'm going to put it at 77.36. I may need to adjust that, so we'll see that later. That's going to be stop. And then for the target, remember the final target we just said is going to be 76.26.5. That's going to be the final target. And my safety target, I mean, if the distance between entry to stop is 3 points from 33 to 36, then that makes my safety target to be 3 points below, which is going to be 77.30. Okay, so I'm just going to place the order. Okay, yes, confirm, and the order is in the system. but I'm gonna have to adjust it, okay? And you can see I'm gonna have to adjust it because on the 2-minute time frame chart, you can clearly see how my stop is in the middle of the zone. So I need my stop to be located at least at 43.5, right? Yes, 43.5. So the buy stop, I need to drag it up, and this is of course going to change the location for my safety target. So 43.5, that's going to be the location for the stop. And when I do that, the question is, am I in the green? Am I in the white side everywhere? Well, here I am 43.25, 43.25, and here too. Okay, so my stop is on the white space everywhere. Okay, so I have a good location for my stop, but this implies as well I'm going to have to change my location for the safety target. So if my stop is 43.5 and the entry is 33, so we are assuming 77.43.5 minus 77.33, I am assuming 10.5 points of risk. So if I project that below my entry, that's going to be 77.22.5. Okay, so I'm going to have to grab my buy stop at 30 and bring it down to 22.5, 22.5, which is going to be right here. Okay, and if I do that, that's it. My trade is set up, and now I just need to wait for the NASDAQ to come to me. Okay, we have the entry in the UFO. We are really targeting that particular UFO, right? This one is a little bit in the middle of nowhere. That one is a little bit in the middle of the UFO, okay? But really, that would be good because earlier, when the price of the NASDAQ was a little higher, we saw that the UFO here, the 33, was more or less lining up with the average. Okay, so again, we need to have a little bit of a, if I call it a guess, it's not the right word, but you need to kind of use a little bit of your own experience when observing those charts to kind of anticipate where the moving average would be. Okay, and by the way, I will be developing at some point, just to make our life a little simpler, a moving average that, you know, tells you what its price would be if you reach a certain UFO. Okay, and that way it's gonna be even easier for us. We don't have to guess. Okay, but for now, you know, we are still in this anticipation mode. Okay, let me take a look while we're waiting for this trade to execute. We got 4 minutes before we have a new close. Let me go ahead and take a look at your questions. Orlando, can you review how one determines if the market has moved too far down and it may not be prudent to short as the market may be about to reverse? Okay, so I know where you're coming from, and I'm trying to find the right words to say what I'm about to say. So what I'm about to say is you don't need to know that as long as your safety target is happening prior to the UFO in your target time frame. Okay, so if your target time frame was 60 minutes and the green UFO earlier was 29:02:25 and your safety target is happening prior to that, it doesn't matter if the trend is reversing because you are very likely to get out of this trade for a break-even. Okay, and it's worth it to take the risk because trend tend to last, and you know that in a downtrend, buy orders tend to get canceled. That's why in a downtrend you will see red UFOs working more often than green UFOs, or in an uptrend, green UFOs working more often than red UFOs. So really, you don't need to answer yourself the question, when is the trend going to reverse? Because that is way too much of trying to anticipate, you know, what's going to happen. You don't need to anticipate what's going to happen. You just need to execute trade based on probabilities and therefore based on unfilled orders. But rely on the unfilled orders that are likely to stay, which are the ones in the direction of the trend, because the ones that are buy orders when the trend is down, those buy orders will tend to be canceled. Okay, so Our job is not to do market analysis where we need to do predictions. Our job is to trade and catch moves. And to catch moves, you want to execute a methodology with probabilities instead of anticipate and bias your mindset and now be totally convinced, oh, I know the trend is going to reverse, I'm not going to take the trade, just to end up frustrated because now you missed a trade and next thing you know, now you trade in revenge mode, right? So no need to do that, Orlando. Just keep your thinking process simpler. Just follow the rules. That's it, okay? Too many steps, okay? And again, very intelligent approach and thought. At the same time, it would not help you in trading because it would get you biasing yourself and ending up, missing trades that would end up frustrating you, okay? Brent, target hit, 500, very good. Dear target hit, very good. I love it, guys. I love it, guys, how we're working in parallel. Devan, you closed your one contract for 75. Thanks, my pleasure. And I thank you, by the way, guys, because it's so beautiful to do this together. It really makes my day. Something I love. So thank you, guys. Lisa, you took 525 out of the S&P. Thank you. Love it. Romy, how do you determine to take profits from UFO sign? Well, Romy, I would like to recommend you to watch the sharpening sessions because I believe it was sharpening session number 3. That's when I talked about setting targets. Okay, so everything is explained there. And what I did today is simply apply that. Okay, so I went for a 60-minute time frame. That's it. Okay, guys, we just had before I continue with the questions, we just had a new close. Okay, it's 10 a.m. New York time, so we just had a new close. Therefore, a new calculation for the moving average, which is now 24. Okay, is now 24, meaning now that this UFO this moving average has moved down from the prior candle. Okay, the prior candle where it was 30 to the current candle, which is 24. So basically we have a drop on the average of 6 points. This is how intense the market drop today is, okay? 6 points drop on a moving average in one candle, that's not a joke, okay? The market is moving, okay? So what are we gonna do? Well, we're gonna have to cancel this trade and reset it because now we are targeting to short using the 33 level where the average is more around the 20 pluses, okay? And, we will be basically shorting above the average, okay? So I'm just gonna hit on the yellow button, okay, yellow button, okay, and you may notice how the matrix really uses a lot of resources of TradeStation. Just minimize the stuff you have in the matrix, guys, if your computer goes slow when you use the matrix. And so what I'm going to do, again, we're talking about 22. Basically it was 6 points down. So if I take 33 and I move 6 points down, we're going to be talking about the 27 level. So I got UFOs there around 27. 27, I got all the way to 29. 29.5 is here. So I got 29.5 is here, okay, 29.5 is here, okay, and guys, the days, again, I'm talking about trading psychology one more time, the days when you see the markets moving aggressively to the downside like today, it may make you feel, oh my God, it keeps falling and keep missing it. It's okay. It's important that you keep calm and keep applying the rules, okay, because you will catch the trade in the end, okay, either the continuation to the downside or the reversal with a new uptrend, okay. So it's okay. Just keep applying the rules. So discipline goes first. So we're gonna be relying on those 27 levels. We got 27, 20, 25 with the bottom part of this UFO being a 25.5. Okay, so that UFO is 25.5 with the top 29. So this is overlapping the average, or should overlap the average. This one here is the bottom part of the UFO is 25.5. Okay, so we got these 25.5 UFOs well aligned. Okay, so yeah, I'm just looking at the two. I'm a little concerned about this UFO on the left. You'll see why in a minute, okay? So anyway, let's plan on the trade, okay? So we're gonna be shooting again. We haven't got to the 76.26 level that we mentioned earlier. So I'm just gonna go back to view order bar. Okay, so again, here we go. So view order bar. Two contracts. We're gonna be entering short with 2 limits and 1 stop. So same thing that we did before. Entry is gonna be 77.25.5. That was the entry. When it comes to stops, okay, I'm gonna be using 29.5 and 1 tick. Okay, so it's gonna be 77.29.75. Okay, so 77.29.75, and then we'll have the safety target, and finally the final target. I'll do the final target first because that one is easy. 76.26.5, that's the final target. We saw that earlier. And then when it comes to safety target, so we are talking about 29.75 to 25.5. We're talking about 4.25 points. If I project this below 77.25.5, this is going to be 77.21.25. Here we go. So I got the plan, I'm placing the order, and the order is in. Okay. Now here is the reason for my concern, as I was stating earlier. So even though on my tick charts and share bars it's looking good, I got my entry with the UFO, the stop is above, all of this is looking good. The problem is that my stop on the 2-minute time frame, it's falling within that UFO. Okay, so really that is not the way to do it. Okay, this is not the way to do it, because I may get stopped out just to see the market fall out of this UFO, and that would be very, very problematic. Okay, so I'm gonna have to put my stop above 43.25, which is the same as here, and therefore that would end up in the white space, and 43.75 would also 43.5 would also fall in the white space. Okay, so it seems that 43.25 is gonna be the way to do it. Okay, so I'm going to drag my buy stop. Okay. And again, when the market is giving you a lot of volatility like today, the distance to stops is going to be great. Okay, where the problem is that unless your account has certain size, you may not be allowed to take the trade. Okay, based on risk management rules. Okay, but we cannot change that. Okay, so a few days later, we'll have the launch of the micro E-minis, okay, and that would be one way to fix it. But at the moment, if you cannot, you cannot. But please don't have the stop in the middle of a UFO, because that's the recipe to get in trouble, okay? So what do we have now? Well, we have a risk of 43.5 minus 25.5. We have a risk of 18 points, which if I project this below, that brings our safety target to 77.07.5. Okay, so I'm going to grab this one and move it down to 77.07.5. Here we go. Okay, 77.07.5. That's what I have. Okay, so what do I have? You can see clearly on the screen. I have, let me type it for you. I have the stop is here. Then I have the entry, which is here. Then I have my safety target, which is here. And then I have the final target, which is there. Okay. Notice how the distance between entry to stop and the distance from entry to target 1, which is the safety target, is the same. So we are planning to remove the risk of the trade very, very efficiently, even though in this case, efficiently is 18 points. Okay, so again, today is a volatile day, so that should do. Okay, this is what the methodology suggests, and we are just going to be disciplined. That's all. Okay, but at the same time, be ready to use your time stops, be ready to use the trade management rules, etc., etc. So you are, in the right side of the trade and protecting your profits and minimizing your losses. Okay. So let me take a look at your questions and we will conclude the session. Hopefully we get filled before the end, even though it's looking a little far, but at least I gave you the instructions. So let me see. John, good clarification explanations. Thank you. Wojan, guys, gals, just watch the sharpening sessions at least twice. Write out the plan in your words each time and compare notes. That's what I did, and I'm finding more clarity than ever. Well, Wojan, it's great that you are sharing those thoughts because this is the way to do it. Okay, and again, this of course requires a little bit of your time and effort. Okay, but that is how you excel. Okay, that's how you become a professional trader. Ellen, while we are waiting, can we set up a trade on the S&P at the same time? Yes, you can. Now, what we haven't discussed, Ellen, is risk management. Okay, and one of the components of risk management that we will discuss when we do sharpening for risk management is correlated markets. Okay, so if you were to take the trade on the NASDAQ and the S&P and you happen to get filled on both trades at the same time, you may end up profiting from both trades at the same time. You may end up losing from both trades at the same time, which means you may lose double. And again, normally when you would want to do that, you would want to reduce the position size of the trades because you are dealing with correlated markets. Okay, so the short answer to what you said is yes, you can do it. At the same time, you have to do this in a way that is safe, and safe in this case means risk management. Okay. Orlando, thank you. Marcus, if the zone is too wide for my risk, do we skip or just enter somewhere deeper in the zone? Well, if you enter deeper in the zone, what you will end up doing, Marcus, is entering above the average. And, remaining in the trade, if you go above the average, makes sense because you still have the UFO. But entering and therefore initiating taking the risk, that makes no sense. I mean, if you think about it, when you initiate planning the trade from the very, very beginning, right? So let me bring my mouse here to the trend, to the common time frame, right? So this candle. What do we do with this candle? Okay, we ignore it. What do I ask you to do? I ask you to ignore that candle and the average and the DMI. Ignore everything, and you look at the prior close compared to the average, and then you look at the DMI, and now you conclude the trend is strong or not strong. So, if you were to have a situation like that, right? Like for example, it happened in this candle, where the close was below, the DMI was strong, you enter the trade, and then price had to go higher, right? Price had to go higher, and finally from there dropped all the way. You don't mind to go above the average, but you don't mind to go above the average as long as the prior candle is telling you what you need to see. What you don't want to do is to enter above the average. Okay? The reason why I'm okay that price goes above the average is number one, because the prior candle told me what I wanted to know, which is downtrend and strong. And the second is because in the edge time frame, I had red UFOs. So then it made sense for me to enter the trade. But what would make no sense is to enter the trade with an entry point which is above the average, because you enter the trade kind of like breaking the rules. Okay, so don't do that. Enter the trade where it makes sense based on the methodology. And if the risk is too much, do this with the euro contract. It's $12.5 per tick. Do it with the 10-year note, the 5-year note. It's much less volatile. The UFOs are smaller. Do it with the micro E-minis that are about to be launched by the CME. Just find a smaller market. Is that making sense? Don't force a trade with a bad entry point just because the account size is a problem. Okay, so that would be my advice. Anyway, guys, so I think I'm gonna have to conclude the session here. I surpassed the time by 12 minutes. Today, let me summarize a couple of thoughts here because interesting experience. Okay, you guys beat me today in the chat room. Some of you have been doing very, very well with your results, which I congratulate you. In my case, I only executed one trade, okay? But at the same time, the methodology is still available. I still have many hours I could keep trading. Is that making sense? So one comment I want to use to conclude today's session is, do not break the rules just because the market today is moving very fast or or whatever. Is that making sense? Just follow the rules, whatever rules you have. You may use different time frames that I use. You may have not used the time stop, and that's why you stayed in the trade. You may have used the variation that we discussed using the reactive time frame, and that made you more active, and therefore you didn't miss the trade. Okay, so that's why you collected a profit that I haven't. Okay, all of this is good as long as you do it in the context of rules. Okay, what you don't want to do is, because the market is falling 1.4% down today and it's super exciting, but you are missing it. Now you kind of get in this mode that, oh my God, I'm missing it. I need to take it. And next thing you know, you find excuses to break the rules. Remember, you will have an opportunity every 15 minutes. Everything redefines. So you will have an opportunity. And even if you miss the market dropping, the market will then turn, close above the average, and now it will give you an opportunity or two to trade to the upside before maybe it rallies even more, or maybe it drops again, right? So you will take the next trade the next time it meets your rules, and you act with discipline, and that will produce the consistency, guys. Okay, so again, in my case, actually very, very proud that some of you on the chat box today, you beat me, guys. Love it. Super proud and super happy. Okay, so good job, and I will see you on Thursday. We'll do longer term trading and super special session on Saturday. Let me bring the calendar before we conclude the session today. Super quick. Let me bring a web browser here. I want to comment on something I said a few times, but I want it to be visual so everybody knows it. May 11, super special sharpening session. Okay, the reason why it's super special is because I'm going to talk about something that I would say almost everybody has asked me about, okay, which is calibration. And apart from discussing calibration, it will be open Q&A for anything and everything, and of course including the UFOs, but anything else as well. Okay, so as you have been watching those videos, like Bojan suggested, for example, making your own notes, I'm sure questions arise. Or as you have been practicing methodology and you understood the rules, but there was this weird case where something happened and you didn't know what to do, questions arise. This is the time to ask, my friends, okay? And this is how we clarify, this is how you kind of make everything to make even more sense to you and help build the confidence that you need to keep acting, okay, on the methodology, and therefore becoming disciplined and consistent, etc. Okay, so I'm counting on all of you guys. 11 a.m. That's Saturday, May 11. We'll do a special Q&A session, okay? And if you were not able to attend, well, you can always watch the recording, but you can also send your questions in an email, and I will be addressing your questions, and then when you watch the recording, you get your answers. Ideally, you are there, so then you can have real-time questions, okay? But you can also show up and watch the recording, okay? One last comment before we conclude. We just had a new close. The new average is 77.14. This invalidates our trade one more time. My friends, discipline and professional behavior. Don't even think about it. Cancel the order, click the cancel button, and replan, replace the order and replan the trade, okay? Do not let the trade, just because you planned it before and now you got emotionally attached with your trade, don't do that. Discipline is key. Follow the rules, okay? Anyway, I guess I made my point. I think I said the same thing like 10 times to conclude the session, which hopefully helps. Anyway, everybody, super pleasure again to be here. I was missing you guys, as I said, since the last Wednesday, so super happy to be here today. Super happy of your action, the teamwork. Guys, see you on Thursday. Bye-bye, everybody.